Hello, grads of FinLearn Academy and fellow traders. In this weekly recap on the broader markets, let's first understand and analyze Nifty. Market from 18,600 odd levels has given us a corrective decline. So far, we were looking for a high in terms of prices being overbought in the short term, which was it shot up above the Bollinger Bands on the daily chart, as well as there was a negative divergence on RSI. So that move has played out and we have seen a decline in the markets. So this decline should be termed as a corrective decline in the ongoing bull market, which you are seeing for the last in terms of the trending move up. So now let's see where are the support levels in this market. Whenever prices decline, first we give prominence to this gap over here. So far, this gap has not been filled, and this is a breakout gap. Why I'm saying this is a breakout gap is that prices were consolidating here, and this consolidation there was a breakout with a gap. So the significance of this gap is high in terms of short-term swing trading. So the first nearby support comes at the recent breakout levels, which takes into account the lower end of the gap, and we are trading close to them. Now let's when market was going up, we were trying to figure out overbought and a decline. Now same way, market is coming down. So we need to find support and when the upswing will resume. So we'll plot the 20 and the 50-day moving average. So the 20-day I will plot in white color and the 50-day I will plot it in green color. So this is my 20 period or 20-day moving average since I'm using a daily chart. So if you can notice there is a confluence of 20-day and the recent breakout levels. So 20-day average is nothing simply but the middle level of the Bollinger Bands. When the trend is up, so now let me plot the band for you. So when the trend is up, we see prices reaching overbought at the upper end of the band and the corrective declines happens till the middle level of the band. So let me plot the band and I will give band white color so it merges with the. So this is it. Prices became overbought. It has declined and the middle band is a good support level. So we need to watch it out here. And in case if prices break, then we have a decent decline towards 17,400. Right? So right now we will go with the support at the middle band and we'll look for a confirmatory signals here for the resumption of an uptrend. So what that confirmatory signals could be. So now let me remove the Bollinger Band and the average. So the 20-day average which is running across the recent breakout or another 100 points from here 17,940 is your support level for the weeks. Let's see how is market going to reverse here strongly or it will consolidate and trade around the 200-day moving average, then move up is to be seen next week. So keep a watch on the 20-day moving average as a trader for support levels. And if you see this decline is channelized, which means that if I mark this channel, connect the highs and draw a parallel line to this, this is channelized. See, either we wait for a test of support or within this channel, we wait for a breakout above the upper end of the channel. A break of the upper end of the channel will suggest will give us a suggest or give us an indication that the correction has ended and we should now move up and test higher levels around this high or even go higher than that. So two things to watch out for this week is again I'll plot the 10 to 20-day moving average. As a trader, I observe the markets and price trading around the 20. So sorry, this is 10. I'll mark my 20. So this is my 20-day moving average, which comes around the lower end of the channel. See, either we are looking for a support to enter into long positions, or we wait for a breakout above this channel to give us a confirmation that the corrective decline is over. In between, which is still market prices are not breaking the channel high, fine, we can see a consolidation in the market with support at the 20-day moving average. So traders can plan the strategy accordingly. Either we have a basing market, or we can see a reversal next week. Basing will be prices not breaking the upper end of the falling channel, so it might trade between the channel and the 200-day, and then we'll wait for further evidence whether it's breaking on the upside or it's breaking the 20-day on the downside. So market corrective decline typically, generally in a bull market, happens for 3 to 5 days. So this high here, it was 1, 2, 3, 4, 5 days, and 5 is also Fibonacci number. This correction is already extended to 1, 2, 3, 4 days. Probably it might be one day of a negative close, or once the channel breaks, we'll conclude that the corrective decline is over. The two key highlights this week is the falling channel for a confirmatory signal that the correction is over, or decline towards the 20 DMA, which also is confluence is with the breakout level as a buying for a short term swing trading or a support level for next week. So that was on Nifty. Now on Bank Nifty, we are seeing the index is outperforming, but at the same time, Bank Nifty has providing leadership to the markets in the last leg. In this decline, it never participated. So that way we can see is the index is an outperformer with respect to the most recent swing, which is 1 week of last weeks of trading. So let's see whether this outperformance continues or not. One thing is that it's any rise over here is too stretched and it is becoming overbought. Let's check on the weekly chart. On the weekly chart also it is overbought. On the monthly there is a leg room on the upside. So Bank Nifty is too stretched on the upside. So far it has been outperforming the markets. And for Bank Nifty, it can reach the channel projection. Please refer to the previous week's video which we have seen, which was approximately around 41,000 level. So again I'll draw that same channel for you. So it is trading close to this channel highs on a daily chart, where the channel projection is coming around 40,700 to 40,800 next week. So that's the potential upside from Bank Nifty, and for that we have to figure out a support level in where we think that it will move up to those levels, which is 40,800 to 41,000 in the current swing up. And when we say swing up, then the last swing low is a support level. So with support at 39,700 is a support level for Bank Nifty. With that as a support, we expect it to move up to 40,800 to 41,000. Once Bank Nifty breaks this, then there will be a corrective decline in Bank Nifty. Unlike Nifty, Bank Nifty has not shown any corrective decline. In fact, that when when Nifty declined over here, fine, Bank Nifty midway took off and showed outperformance. So there was a 4 days of decline in Nifty, wherein there was a 2 days of decline in Bank Nifty, and then it started it uptrend. So for Bank Nifty, the support levels are clearly defined, and we'll be watching out for the outperformance in the coming week. Until this low is not breached, which is the last swing low, any declines in Bank Nifty should find support here around 39,700 to 39,300 odd levels. And the upside levels are defined at the upper end of the channel. So this is the setup for your Bank Nifty in context of momentum trading. Again, I'll mark this channel. So now let me come closer. Yeah. So this is on Bank Nifty. The support is defined here. The upside at the upper end of the channel around 41,000 odd levels. So accordingly, traders can plan their trade. We are seeing an outperformance in Nifty. And again, I repeat, the key to this bull market is sectorial rotation. We have seen outperformance in Bank Nifty, wherein we have seen FMCG and energy going down. So the best way to trade this market is do a top-down approach, which means that see your broader markets and your sectorial indices and figure out which is the sector which is likely to bottom out or move from the current levels and contribute to the gains in Nifty. And before ending the session, I would say pay attention and focus on the sector rotation part. Check all the indices one by one. I'll do one for you, which is I'll just place Nifty. See what will give us a breakout over here. Will it be energy? So I will just open the energy stocks. Energy is also declining, but at the same time, the energy stock is at the support level. So look for move up in the energy stocks. If it's not breaking this support level around 24,000 to 23,700, energy could be the next sector which can lead the markets up. So it's not a recommendation, just trying to show you how to do the top down approach. See, energy has come at support one by one. Check all the sectors. Let's check reality. Reality had seen a decline and has come to the most recent lows. Whether it's breaking those this or not, you have to see. So keep Nifty on the left. Check one by one all the sectors. I'll do one for you, which is IT. IT has seen a decline. It is range bound, but at the same time, it is coming to the support level. So if all the sector indices are coming to the support level, then we don't expect Nifty to break its support. Getting it? If all, one by one the sector indices are reversing, and that reversal will tell you which is the sector which is going to lead the next swing up, you or which sector will move up. That answer you will get once you analyze all the sectors with the Nifty. So keep Nifty on the left, study all the sectorial indices, and you will get a clear indication of the markets, because what I am seeing right now is IT is at support, uh, energy is at a support level, and Nifty is at a support level. Banks, the outperformance is there, but uh, a minor decline in bank, and yeah, a 500 odd points is always a minor decline in your banking stocks. It's bring down to support. So going forward next week, the 20 DMA, as I pointed out in Nifty, I'll add you once again over here for you. This is your 20 DMA. So the key focal point for next week will be your 20-day moving average, and study all the sector supports one by one. Fine. So this is the 20 DMA. So keep 20 DMA as your reference point for the markets next week for support or a consolidation, and break of the channel over here as a confirmatory sign that the decline is over and now we should see an up move, or we should see an upswing or the continuation of a bull run. So that's all from my side, friends. Thanks and have a nice week ahead.